Hi everyone, and welcome back to the TraderLion channel. My name is Richard. With me is Ross Haber, and today we're going to be walking through the chart of Qualcomm, one of the greatest winning stocks of all time, which advanced from a stock split adjusted price of about 7 all the way up to 200 before ultimately topping and basically consolidating for 20 years before recently finally overcoming that key barrier. But anyway, we're going to be talking about the fundamental story, the earnings, the sales growth, and of course the actual chart, and talk about how to enter and manage a position like this in a fantastic true market leader. So first of all, let's talk about the earnings. Ross, if you could scroll down just a second.
Absolutely.
During this basing period where it rested for a few months here, you can see some negative earnings growth. But then right as it starts to move up, we see an explosion of plus 233%. And that continues to basically triple digit growth the next few quarters until the ultimate top. And O'Neill down here, let me point this out using my annotate tool. Right down here, he points out some key facts known before the first 5 points of the last 3 years of EPS was 0.3, 1.28, 1.7. So you're seeing some nice growth there, averaging 79% annual EPS growth. Last quarter of earnings was plus 29%. Last 3 years of annual sales growth was plus 99%. Last quarter sales was plus 54%. So a little bit of standout growth there. And the next year annual estimates were plus 50%. So you can kind of use this template and try to find stocks nowadays that kind of matches those same characteristics. So that's pretty much the fundamental side of things. Obviously, the driving factor in these earnings or sales was the explosion of the use of cell phones, which Qualcomm obviously made the chips for. And now let's move on to the actual chart and talk about how to find and position in a true market leader like this. So Ross, I'll hand it off to you.
All righty. So now taking a look at Qualcomm's weekly chart. Before we analyze the breakout here, I thought it was worth pointing out visually how easily you could have seen accumulation versus distribution, which is one of the major things that Bill pays attention to, and actually a very simple method for analyzing a base just on its most basic level. How many weeks of accumulation are you looking at versus how many weeks of distribution? If you've got more distribution than you do accumulation, you're typically going to stay away from that base. And this is very easy to see here. So we've got here's our first failed breakout. But notice, if you want to, we don't have the entire base on the screen, but if you notice, we've got a ton of distributive volume here on the down weeks. When Qualcomm does rally, it's happening on below average volume. When it sells off again, we're getting that well above average volume. And you'll notice this. So we've got a failed breakout here, which isn't surprising. And let me clear up some of this mess. And then once again, after Qualcomm's breakout fails, it sells off again on huge volume. And that distributive volume persists all the way until about here. You can see visually, so we start to see not only the upside volume come in, but more importantly, the distributive or downside volume dry up quite a bit. So here, notice downside volume not only dries up noticeably to well below average, you've also got
tight action
right there, which is also a sign of it's constructive when you start to see that a stock holding up on tight volume. When you see price action tight, it's holding up in volume declines like that. Once you see that, and that makes this upside volume that much more significant as the stock rises. And now we're starting to see, and let me clear up some of these arrows. Now we're starting to see the pattern begin to change. I mean, if we were to, and it's going to be an arrow to just draw a line right here, you can see all of a sudden, between that arrow and this arrow, there's an abundance of upside volume. And anytime we're starting to, well above average in here, you almost see an absence of anything to the downside. And notice when we do see the stock sell off, it's coming on much less than average volume, which brings us to the breakout. And let me clear up all of these arrows again. You'll notice we've got a cup and handle base here. And ultimately, if you'll note it in this handle, as the action tightens up, even though we fall off a little bit here, you can notice volume dries up considerably here in that handle. And again, the first notable volume, and again, the first notable volume well above average comes to the upside on the breakout. And you'll notice once Qualcomm breaks out on this volume, it's another one of these stocks. And you'll hear me continue to repeat it ad nauseum as we go through these. It's the best part about finding a liquid high quality leader is once you're up and in 9.5 times out of 10, 9 times out of 10, you're going to find a stock that respects its key moving average. Typically it's 50-day. Sometimes you'll find one that's that'll hold 21 or a 23-day exponential moving average with trips to its 50-day, but in this case, you'll notice you get a breakout and all the way until the stock tops in climax fashion, which gives you a chance to get out, what's the word I'm looking for, proactively instead of waiting. But again, even if you do what I'll typically tend to do is wait for, once you find a stock that respects a 10-week moving average, even if you were to wait for it to break its 10-week line for the first time there, you're still making out like a bandit on this stock. So, this just happens to be one of those stocks during one of those times that allows you, and we'll look at it more closely on a daily. It gives you a classic climax run to sell into. And again, even if you didn't, you're doing quite well for yourself, waiting for the averages waiting for the stock to break an average and tell you, rather than trying to finesse it into strength. It gives you a clear sell signal here and a whole lot less to think about. And just to add, before we move on to its daily chart, this is one of those stocks that's a super powerhouse. It doesn't give you really chances to get back in on strength. It does, but it becomes more difficult. But this is, so you'll notice as it's marked, one of those classic stocks. Every time it pulls back to its 50-day until it actually closes below, give you a chance to add. You can see there was a spot you could have bought strength right here where it says buy. You probably could have done the same here. But you'll notice on a stock like this, and it becomes more obvious on a daily when a stock starts whipping around, it just happens to be one where you buy it on strength and it will wear you thin as it shakes back down, retests that pivot as well as its 50-day moving average at ultimate or 10-week line, which is its 50-day moving average, this red line. And ultimately, again, this is why Bill tries to trade on weekly charts, and we will tend to use all of our sell stops on a closing basis. But it's one of those things where, and I always remember Bill saying they'll either wear you out or scare you out. And that's a perfect example of it. If you buy it on strength, you're really going to need to have the ultimate discipline and patience to sit through a shakeout like that, because it looks painful here. It'll look even more painful on the daily. And when you have your hard money, when you make a ton of progress in a hurry and all of a sudden you're negative in a hurry, it does wonders on the brain. So other than that, anything here, let me clear up my mess of arrows. Was there anything you wanted to point out before we went on to its daily? Richard?
Yeah, I guess just one thing. I mean, this point right here, right at 200, split adjusted, of course, the stock didn't overcome that level until basically 20 years later, earlier in 2020. So this is one of the things you have to recognize when you have a stock that goes from seven to 200 and under, I think maybe even under a year. It's going to need significant time before it either recovers and starts a new run, if it ever does so, and likely it's not going to be that same powerhouse of a leader that second time around. So you have to recognize that fact. And we saw that a lot with the 2020 leaders. A lot of them are going to need some significant time before they potentially go on future uptrends.
And along with it, again, and we'll look more closely on the daily with that climax type action, there was a Wall Street Journal article. I think it was Payne Weber came out with a $1,000 price target right before that 4-for-1 split, which was pretty sensational. And, I'll just point out that's typically when all the news is the best and everyone's the giddiest and everyone, your taxi cab driver's telling you how much money he made on Qualcomm. It's time to start looking over your shoulder and be careful. So.
Perfect. Well, let's go over to the daily and look at this first breakout in MarketSmith. All right, so here we are now on the daily chart looking at that first breakout. Here's the standard cup and handle pivot at around 60. And some things we wanted to point out here is it's forming this handle as the market is actually increasing. So it's actually decreasing in terms of RS for the majority of this handle. but then we see a little bit of a character change. The market has a little bit of turbulence, and it starts to really tighten up here above that 50 level. And then the RS line really just takes a sharp turn upwards and goes to kind of 1 o'clock, 2 o'clock. So this is where the character change happens. Very tight action in this area. And then once again, the volume comes in. You can see that clearly here. And then it's just off to the races to that breakout point. So definitely, if you're watching this, you have this on your radar, you could have gotten in a little bit earlier so you can handle this whippiness near the kind of true cup and handle breakout. But as often happens, we have a couple retests of that breakout point. We have it pull back to 21 EMA here and do it once more even here. So don't feel like just you've missed that first breakout, starting to move up without you, that you won't get a chance to break to get into that potential true market leader. So always keep an eye on it, even if it's broken out without you, and look for those retests of that key level, retests of key moving averages, and work your way in if it's a very promising stock. So from that point, it really just rides that 10-day or whatever that green line moving average is to higher prices. And then as we saw, really takes off, holds that 50-day, 10-week for the majority of the run. And I guess we can now move forward and talk about the final climax run after that strong high tight flag breakout.
So now here is Qualcomm's daily chart showing its climax, which is going to give us a much more clear view. And then, as you can see, this week right here is enormous. That was our big wide weekly spread there. And as is very common with not only do we get this almost vertical move, we're getting these big exhaustion gaps, and you'll see as we start to get tired here, Qualcomm, we get a big reversal here, which would, depending on how wide that week is, but I'm going to assume we're getting into some climax action here as we've gone from 7 to almost 200. And ultimately, 2 days later, you do get a negative reversal. Again, we've discussed this is stalling or churning action here, where you hit 200. That's your Jesse Livermore century mark area. You can see we topped out at exactly $200 there and close back on those. And it doesn't take long before volume comes in on the downside and we get a gap below its 50-day moving average. So if you're paying close attention here, you could easily have been selling into this strength here, and that failure at 200, which pre-split was much higher. There's all kinds of impetus to be selling, and even if you were, again, I never do anything all at once. Maybe I would have sold a third or a quarter, maybe another piece, and more often than not, I'm going to be stubborn and hold at least some of this. I'm going to be forced out at that. So I need to be forced out of at least part of my stock. Otherwise I feel like I'm guessing. So, but this is about as classic as it gets in terms of a climax run, and then your, the break of its 10-week or 50-day moving average thereafter, which is other than, and here we'll point it out, we've got, notice here, we do gap down, and we do have, that is an ugly day of action where we close below Qualcomm's 50-day moving average. However, we have a rule where 1 day below, we're not going to sell. We'll wait for the second day. 99% of the time, we're going to use stops based on a closing basis. But in this particular case, if you've got a position on an intraday basis, we will stop out if we undercut that low, and then look to revisit after, even if it means buying stock back higher. And fortunately, that rule works well for us here. Stock regains its 50-day moving average and never breaks again until it actually tops and rolls over for the next 20 years. So
for sure. And just to point out, here is the high tight flag that we saw on the weekly. I'm just going to draw it. That's the standard pivot 101.53. And let me erase that real quick.
Let me get rid of all my mess for
you.
Yeah,
sure. So, and to point out here, you've got a nice consolidation here. So it moves up towards that pivot right at 101.53, fails initially, not much volume coming through. So you might not have even taken that because there's no volume coming in. But then you've got a nice consolidation pivot right there, right at that point, in an inside day and up setup. So definitely a way to catch that final push through if you aren't positioned already from much lower, but definitely a very strong high tight flag pivot and breakout. And then it just is off to the races until finally it has that climax action, and yeah, completely falls apart and rests for the next 20 years. So yeah, definitely a very interesting stock to study, both in terms of the fundamentals, technicals. Such a powerful move in basically a year. And yeah, Ross, anything to add about Qualcomm?
No, that's it. And, this was right around that time also where we started to realize that you could really have, a mega powerful move in a, what would be a super liquid larger cap stock. Whereas,
Right.
the S and CANSLIM, typically this wouldn't be your textbook size of company, but that has changed a lot, as we now know, over the last 20 plus years. And Qualcomm was one of those that just exploded, even though it was a giant company.
For sure. And I guess we'll leave it there. For everybody watching, thanks for tuning in. If you enjoyed, please go and leave a like down below and subscribe if you're new to the TraderLion channel. And we'll see you guys in future videos.